Okay, welcome to the Mickey Dickey midday report. So this is going to be an update on what's going on in the market. But so it'll be a little bit more than noon, but generally about this time of day we'll have an idea what's going on in the marketplace. So here's what we know what's going on in the marketplace right now, and these are the items that I'm looking at, and I want you guys to take a look at as well. So here's the first thing that I see. Now we have this idiot who tries to put stuff out there saying what's going on in the S&P 500. And what's going on with the S&P 500 is it's up 5 months in a row. Yay! Doesn't mean a darn thing. He's trying to say that history favors momentum. It doesn't favor anything. 2 years ago, they were telling us that it was going to go down forever. Now they're going to tell us it's going to go up forever. The one thing I tell all my clients is really very simple. The market's going to do this, okay? And yes, generally it's going to be going up, but it's still going to go up and down. We haven't had a downturn of more than 2% this entire year in the S&P. Now, granted, we're barely 3 months into it. I get it. But this doesn't mean necessarily anything, good, bad, or indifferent. So love these idiots that put stuff out there because they think they have to fill the space, and they do. So I'm not necessarily agreeing with momentum or not agreeing with momentum, but you also have to understand why people are doing what they're doing. We have money managers who are taking money that you guys are putting in on a monthly basis in your 401ks, and they have to put it into the S&P 500 because most of these mutual funds that are the bigger ones are tracking the S&P. Well, a lot of these individual stocks are up huge. Nvidia, Google, Microsoft, Apple, and so forth. And they couldn't sell it at the end of the year last year because they rebalanced everything back in back in September. Well, they have to rebalance these portfolios because they can't be out of whack. You can't have Nvidia at 10% of the S&P when it's only supposed to be 6%. They have to sell these stocks, not that they want to, but they have to rebalance the stuff. They have to rebalance it, putting it into other S&P 500 stuff, which is why you're seeing the broadening out of everything, okay? So that's what's happening. You're probably going to see this continue to happen, which means you're probably going to see your Apples and your Microsofts and your Googles kind of come down a little bit. Now, again, this isn't going to be a sell-off that they're down 30%. Kind of the same thing that just happened back in September and October. The market was down 7-8%. Kind of came back, did its thing because they rebalanced everything. So again, I don't necessarily believe in the momentum. I think you're actually going to see some broadening out because these fund managers have to rebalance their portfolios. Keep that in mind. Next, I was talking about this earlier on my streaming. Those of you who haven't seen the streaming, check my streaming out. I try to do that around 8:30 every morning. But what I found interesting was that the Trump Social has started out at $9, went up to 170, came all the way back down. Now it's because it was legal trouble. Now it's back to where it's going. Or it's back up to like 60 some bucks a share. But what I found interesting about this one, I hadn't really thought about this because of all the legal troubles that Trump's had. Not that Trump Socials had, because Trump Socials had their own legal troubles trying to become something. It's possible that Trump may try to access money out of this one. So that'll be interesting to see if that actually happens. So keep an eye on that. So I do like this one, somebody bringing it up, something new for me to keep an eye on. And I've had some people ask me, should we invest in True Social? Again, my issues on investing are, does it have a good management team? Does it have a good balance sheet? Does it have a good market? Again, good, bad, or indifferent. I don't think Trump's running True Social, so don't consider him good, bad, or indifferent. I believe it has his own management team. It's clearly not profitable. And the question on it really becomes, is this a good thing for the market to have Trump or the Truth Social doing kind of the same thing as everybody else? So there's that. So it doesn't fit my three models to be investing in it. That doesn't mean you can't try to trade it. But that's up to you. And again, I'm not a big trader. I'm more of an investor. My next one was, speaking of trading, is GameStop. Gee, who could have predicted that GameStop was going to fall on its face? Because it doesn't have a good management team. It doesn't have a good balance sheet. And I don't know what its market is anymore. So I thought this was an interesting one to take a look at and love that. Overall, just to give a quick update on the market, the S&P is up 0.34. The Dow's up 0.6, which is fantastic. The Russell's kind of crushing it. So you got your mid cap and your small caps, which are still lagging behind the other indexes. And now a NASDAQ now positive. So generally speaking, we had 3 or 4 days where the markets were kind of down a little bit. And again, nothing special, not even a percent. So it's not like there was a wholesale sell-off there. They took a breather, so to speak, and now they're kind of coming back. I do think the market's trying to digest where interest rates are going to go when we're inflation. and again, I keep bringing this up. This is what inflation is. Inflation's at 3.2. Bottom line is inflation's at 3.2%, and we know that shelter is at 5.7%. It's 40% of the total. It's not coming down. But what we're trying to figure out is, what is Powell doing? I mean, last week Powell came out and said that he thinks at the moment he's not going to try to push inflation down to the 2% number. He's not giving up on 2%, but he's not pushing it down right now. So my gut feeling is that at the moment he's trying to decide if shelter is going to come down, and if shelter does come down, it should get him down to his 2% number. If it doesn't come down, or shelter starts coming down and the other parts of inflation continue to go up, what is he going to be stuck in this 3% range? Now, the historical norm is 3.8% for the United States. So realistically, we're not in bad shape if we're in the threes. So I don't think that's a negative thing to be in the 3% range. I also don't think that the federal funds rate being between 5.25% and 5.5% is a problem, because the entire decade of the 90s we were there and we were doing just fine. So I don't think he needs to do anything. What I am a little bit concerned on a short-term basis with the market are two things. One, we've had a very big run up in those big seven, and they are a very large portion of the S&P 500. And as we have a sell-off of those individual stocks, we might see a small sell-off on a short-term basis as they rebalance and reallocate. Again, maybe something very similar to what we had back in September, October. Nothing major, but a typical normal sell-off. Might be a good buying opportunity for people. So if you've got some cash available, that might work out. So if we start seeing that kind of a pullback, that's an issue. The bigger question is really, is there a bigger issue here? And is this going to persist? Because the market has baked in a whole bunch of rate cuts. And at this point, the market is very happy with the fact that they can just push that down the road. And yes, maybe we won't get all the rate cuts this year. They'll get pushed into next year. They may not get them at all. And is that really going to be a negative thing for the market? And is the market going to freak out about it? And do we have a bigger downturn? Personally, we don't know yet, because we haven't seen the market actually listen to what Powell is continuing to say. And is it going to be an issue? So I think that's what the market is kind of fighting with at the moment. And we're going to probably can go sideways here for a little bit. And it might be for until he speaks again, or we start seeing some more data that's going to be supportive. Because at this point, all the CPI data and all the inflation data and all the unemployment data is pointing for him to not do anything, which he seems very happy to not do anything, and he should be. He shouldn't do anything. I've said that from the beginning. He shouldn't have dealt with the transitory thing by raising interest rates. Shouldn't have been a thing. And the same thing now. He's where he's at. He doesn't need to do anything. He shouldn't do anything. And he seems very happy where he's at the moment, and I'm happy for that. And the market seems to be okay with it. Now, that doesn't mean that the market's just going to continue to go up. If we see some pullbacks, unless we see some cracks in the market, it could be a good opportunity to buy. I'm not saying it is. I'm just saying that it could be a very similar situation where we're just having a rebalance, and it might be an opportunity to buy some of these stocks that some people thought had gotten overpriced and have taken a 10 or 15% pullback, and gives you another opportunity to get into them as they continue to grow. So that's what I see is going on in the marketplace right now. And until something else happens, I think that's where we're at. One last note, didn't talk about this yesterday, but Krispy Kreme is now going to be sold in McDonald's, which I love Krispy Kreme. One of my favorite things is to be sitting there on the conveyor belt that's coming out and get them nice and warm, hot off the table. Love it. But what you might want to be looking into is, if we're having McDonald's having a bigger source to sell out the Krispy Kreme donuts, it might be a good time to buy in some of those weight loss companies. Just saying. Dickie out.